Welcome to your Monday mortgage market update. Well, good news, rates are starting this week about where they started last week. So really not much change. They are slightly higher, just over 7% instead of just under 7% where they were last week. As expected, we didn't have much market moving news last week, and that's why rates basically stayed unchanged for primarily the entire week. On Tuesday, we did see retail sales numbers come in, and they were lower than expected, and we revised the previous month down as well. So remember, bad economy equals good for rates. And then on Friday, we saw the S&P Global PMI Index. The PMI Index stands for Purchasing Managers Index, and it basically explains how things are happening in the world of the people who are creating the goods for us to buy. This week, Fed members speak all week long, as they do for the week or two after they give us their rate choice. On Tuesday, the home price index and consumer confidence numbers both come out. On Wednesday, we'll see some new home sales data. Thursday, pending home sales data. And then on Friday, PCE. PCE stands for Personal Consumption Expenditures. It's basically what consumers are currently paying for goods and services. So it measures inflation. And we know that measuring inflation is really what the Fed is all about. Once inflation begins to come down, they'll be able to cut rates. Many think inflation has come down enough for them to already start doing that, but so far we've gotten none of that. So this number is less heavily weighted by the Fed than other numbers are, but it's still an important one. How about this week's interest rates? Like I said, we're just barely higher than we were last week. We're starting the week with a 30-year, according to Mortgage News Daily, at 7.01%. The 15-year is beginning at 6.42%, and the FHA 30-year is at 6.49%. So what can we do for you this week? Well, some people don't know that we do home equity lines of credit. That's right, Weber Mortgage can help you with a HELOC. If you've got some consumer debt out there, maybe some credit card debt, you need to go check and see what you're paying in interest. It's probably way more than you think. Could be as high as 18, 22, even 25%. If you're not paying your credit cards off every month, you're probably spending money that you definitely should not be spending. We can get you access to the equity in your home by doing a home equity line of credit or a HELOC. We can use that money to pay off high interest debt, and financially you'll be in a much better position. If we can do that for you, please call Weber Mortgage today. After all, Weber Mortgage is a family in the business of helping families.